Arizona Life and Health Pre-Licensing Certification Exam. Question 1. In Arizona, who is responsible for appointing the Director of Insurance? Option A. The state legislature. Option B. The governor. Option C. The Attorney General. Option D. The National Association of Insurance Commissioners, NAIC. The correct answer is option B. The governor. The Director of Insurance is appointed by the governor and is responsible for enforcing the state's insurance laws. Question 2. Under the law of large numbers, as the number of similar risk units increases, which of the following happens? Option A. The cost of insurance increases. Option B. Predictability of losses becomes more accurate. Option C. Or risk is eliminated. Option D. The probability of loss decreases. The correct answer is option B. Predictability of losses becomes more accurate. The law of large numbers allows insurers to predict future claims more accurately by looking at a large pool of similar risks. Question 3. Which of the following elements is not required for a legally binding insurance contract? Option A. Offer and acceptance. Option B. A consideration. Option C. Competent parties. Option D. A medical examination. The correct answer is option D. Medical examination. A medical exam may be part of underwriting, but it is not a legal requirement for a contract to be valid. The four elements are offer/acceptance, consideration, competent parties, and legal purpose. Question 4. In life insurance, when must insurable interest exist? Option A. At the time of application. Option B. At the time of the insured's death. Option C. Throughout the entire policy period. Option D. Only when the first claim is filed. The correct answer is option A. At the time of application. In life insurance, insurable interest must exist only at the inception of the policy, the time of application. Question 5. What is the standard free look period for a standard life insurance policy in Arizona? Option A. 10 days. Option B. 20 days. Option C. 30 days. Option D. 45 days. The correct answer is option A. 10 days. Arizona law typically provides a 10-day free look period for life insurance, allowing the policyholder to return the policy for a full refund. Question 6. Which type of life insurance policy is characterized by a level premium and a death benefit that decreases over time? Option A. A variable life. Option B. Universal life. Option C. Decreasing term. Option D. Whole life. The correct answer is option C. Decreasing term. Decreasing term insurance is often used to cover a mortgage or debt, where the protection drops as the debt is paid off. Question 7. What happens to the cash value in a whole life policy if the insured reaches age 100? Option A. It is forfeited to the insurer. Option B. It is paid to the beneficiary in addition to the death benefit. Option C. It equals the face amount and is paid to the policy owner. Option D. It continues to grow until death. The correct answer is option C. It equals the face amount and is paid to the policy owner. Whole life policies endow at age 100, meaning the cash value has grown to equal the death benefit, and the policy pays out to the owner. Question 8. A flexible premium and a separately managed account are characteristics of which policy? Option A. Whole life. Option B. Fixed annuity. Option C. A variable universal life. Option D. A straight life. The correct answer is option C. Variable universal life. Variable universal life combines the flexible premiums of universal life with the investment options, separate accounts, of variable life. Question 9. Which life insurance rider allows the policy owner to purchase additional insurance at specific intervals without proof of insurability? Option A. Accidental death rider. Option B. Waiver of premium rider. Option C. Guaranteed insurability rider. Option D. Payer benefit rider. The correct answer is option C. Guaranteed insurability rider. The GUR ensures the insured can increase coverage despite changes in health or occupation. Question 10. If an insured commits suicide within the first 2 years of a life policy, what is the insurer's obligation? Option A, pay the full death benefit. Option B, pay 50% of the death benefit. Option C, refund the premiums paid, minus interest. Option D, nothing, the policy is void. The correct answer is option C, refund the premiums paid, minus interest. The suicide clause typically limits the insurer's liability to a return of premiums if the death occurs within the first 2 years. Question 11. What is the purpose of the Arizona Life and Disability Insurance Guarantee Fund? Option A, to lower insurance premiums for low-income residents. Option B, to protect policy owners against the insolvency of an insurer. Option C, to provide state-funded health insurance. Option D, to regulate the conduct of agents. The correct answer is option B, to protect policy owners against the insolvency of an insurer. The Guarantee Fund ensures that if an insurance company goes bankrupt, the state will cover claims up to certain statutory limits. Question 12. In Arizona, an insurance producer must notify the director of a change in residential or business address within how many days? Option A, 10 days. Option B, 20 days. Option C, 30 days. Option D, 60 days. The correct answer is option C, 30 days. Licensees must report any change of address or name within 30 days to keep their records current with the department. Question 13. Which of the following describes a conditional receipt? Option A, it provides immediate coverage regardless of health. Option B, it provides coverage effective the date of application if the applicant is found to be insurable as applied for. Option C, it is a bill for the first premium. Option D, it is the same as a permanent policy. The correct answer is option B. It provides coverage effective the date of application if the applicant is found to be insurable as applied for. A conditional receipt provides coverage starting from the application date, provided the applicant meets the underwriting requirements. Question 14. Under the contestability clause, how long does an insurer have to contest a claim based on material misrepresentation? Option A, 1 year. Option B, 2 years. Option C, 5 years. Option D, indefinitely. The correct answer is option B, 2 years. After a policy has been in force for 2 years, the insurer generally cannot contest the policy or deny a claim based on statements in the application. Question 15. Which life insurance settlement option provides a guaranteed income for the rest of the beneficiary's life? Option A, lump sum. Option B, interest only. Option C, life income. Option D, fixed period. The correct answer is option C, life income. The life income, or annuity, option provides payments for as long as the recipient lives. Question 16. A dividend paid by a participating life insurance policy is considered. Option A, taxable income. Option B, a return of excess premium, not taxable. Option C, a capital gain. Option D, an illegal inducement. The correct answer is option B, a return of excess premium, not taxable. Dividends from mutual insurers are generally not taxable because they are viewed as an overpayment of premium. Question 17. Which health insurance plan is characterized by a primary care physician acting as a gatekeeper? Option A, PPO. Option B, HMO. Option C, POS. Option D, major medical. The correct answer is option B, HMO. Health maintenance organizations, HMOs, require members to select a PCP who manages all referrals to specialists. Question 18. What is the maximum time a producer's license can be suspended in Arizona? Option A, 6 months. Option B, 12 months. Option C, 24 months. Option D, indefinitely. The correct answer is option B, 12 months. The director may suspend a license for up to 12 months for various violations of the insurance code. Question 19. Which health policy provision prevents an insurer from charging more or canceling a policy based on the insured's declining health? Option A, non-cancelable. Option B, guaranteed renewable. Option C, conditionally renewable. Option D, optionally renewable. The correct answer is option A, non-cancelable. A non-cancelable policy guarantees that the premium cannot be increased and the policy cannot be cancelled as long as premiums are paid. Question 20. Under COBRA, how long can a terminated employee typically continue their group health coverage? Option A, 12 months. Option B, 18 months. Option C, 24 months. Option D, 36 months. The correct answer is option B, 18 months. Terminated employees, for reasons other than gross misconduct, can continue group coverage for up to 18 months at their own expense. Question 21. Which part of Medicare covers inpatient hospital stays? Option A, Part A. Option B, Part B. Option C, Part C. Option D, Part D. The correct answer is option A, Part A. Medicare Part A is hospital insurance, while Part B covers outpatient/physician services. Question 22. In Arizona, a producer is considered to be controlled business if they write more than what percentage of their premiums on themselves or family? Option A, 10%. Option B, 25%. Option C, 50%. Option D, 75%. The correct answer is option B, 25%. Arizona law prohibits using a license primarily to write insurance for oneself, family, or employer. Controlled business limit is 25%. Question 23. What is the elimination period in a disability income policy? Option A, the time during which the insurer decides to issue the policy. Option B, the waiting period after a disability begins before benefits are paid. Option C, the time the policy stays in force after a premium is missed. Option D, the time before a pre-existing condition is covered. The correct answer is option B, the waiting period after a disability begins before benefits are paid. The elimination period acts like a deductible in time. The longer the period, the lower the premium. Question 24. Which of the following is a qualified retirement plan? Option A, a standard savings account. Option B, a whole life policy. Option C, a 401k plan. Option D, a non-qualified deferred compensation plan. The correct answer is option C, a 401k plan. Qualified plans meet IRS requirements for favorable tax treatment, such as tax-deferred growth. Question 25. What is the grace period for an individual life insurance policy in Arizona? Option A, 7 days. Option B, 10 days. Option C, 30 or 31 days. Option D, 60 days. The correct answer is option C, 30 or 31 days. Arizona requires a grace period, usually 31 days, to prevent the policy from lapsing if a premium is paid late. Question 26. A variable annuity is regulated by which of the following? Option A, only the Department of Insurance. Option B, only the SEC. Option C, both the Department of Insurance and FINRA/SEC. Option D, the Social Security Administration. The correct answer is option C, both the Department of Insurance and FINRA/SEC. Because variable annuities involve investment risk, they are considered both insurance and securities. Question 27. What is defamation in insurance terms? Option A, stealing money from a client. Option B, making false or maliciously critical statements about an insurer's financial condition. Option C, charging different rates for the same risk. Option D, misrepresenting the terms of a policy. The correct answer is option B, making false or maliciously critical statements about an insurer's financial condition. Defamation is an unfair trade practice involving the spreading of false rumors to hurt a competitor. Question 28. Which health insurance provider is a multi-provider network that allows members to go out of network for a higher cost? Option A, HMO. Option B, PPO. Option C, Blue Cross only. Option D, Medicare. The correct answer is option B, PPO. Preferred provider organizations, PPOs, offer more flexibility than HMOs by allowing out-of-network care at a higher out-of-pocket expense. Question 29. In Arizona, how often must an insurance producer renew their license? Option A. Every year. Option B. Every 2 years. Option C. Every 4 years. Option D. Every 5 years. The correct answer is option C. Every 4 years. Arizona producer licenses are issued for a 4-year term. Question 30. What is the common accident provision in health insurance? Option A. It pays double for car accidents. Option B. It requires only one deductible to be met if 2 family members are injured in the same accident. Option C. It covers only common injuries. Option D. It waives all premiums after an accident. The correct answer is option B. It requires only one deductible to be met if 2 family members are injured in the same accident. This provision is designed to limit the financial burden on a family during a single catastrophic event. Question 31. Which of the following is an example of replacement in life insurance? Option A. Renewing an existing policy. Option B. Buying a second policy to add coverage. Option C. Lapsing an existing policy to purchase a new one with a different company. Option D. Changing the beneficiary. The correct answer is option C. Lapsing an existing policy to purchase a new one with a different company. Replacement involves the sale of a new policy where the existing policy is terminated, lapsed, or converted. Question 32. The entire contract provision includes which of the following? Option A. The policy and the application. Option B. The policy and the agent's notes. Option C. The policy and the oral promises of the agent. Option D. The application and the medical report. The correct answer is option A. The policy and the application. The entire contract consists of the policy document, any riders, and the attached application. Question 33. A major medical policy typically has a co-insurance feature. What is its purpose? Option A. To pay for the first dollar of a claim. Option B. To share the cost of a claim between the insurer and the insured, e.g. 80/20ths. Option C. To provide insurance for many people. Option D. To cover small doctor visits. The correct answer is option B. To share the cost of a claim between the insurer and the insured, e.g. 80/20ths. Co-insurance requires the insured to pay a percentage of the costs after the deductible has been met. Question 34. What is the morbidity table used for? Option A. Predicting the age of death. Option B. Predicting the likelihood of illness or disability. Option C. Calculating the cash value of a policy. Option D. Determining the tax rate of an annuity. The correct answer is option B. Predicting the likelihood of illness or disability. Life insurance uses mortality tables, health insurance uses morbidity tables. Question 35. In Arizona, misrepresentation on an application is grounds for voiding a policy only if: Option A. It was an accidental error. Option B. It is material to the risk and the insurer would not have issued the policy if the truth were known. Option C. The agent knew about it. Option D. The applicant is over age 65. The correct answer is option B. It is material to the risk and the insurer would not have issued the policy if the truth were known. Material misrepresentation is a false statement that significantly changes the underwriting decision. Question 36. Which of the following is not an unfair trade practice in Arizona? Option A. Acquisting. Option B. Rebating. Option C. Replacement. Option D. Coercion. The correct answer is option C. Replacement. Replacement is a legal activity as long as the specific replacement rules and disclosures are followed. Question 37. What is twisting? Option A. Bending the rules of an application. Option B. Using misrepresentation to induce a policyholder to drop an existing policy to buy a new one. Option C. Charging two people different rates. Option D. Providing a gift to a client to get them to buy. The correct answer is option B. Using misrepresentation to induce a policyholder to drop an existing policy to buy a new one. Twisting is a form of illegal misrepresentation. Question 38. A flexible premium deferred annuity (FPDA) is best suited for Option A, someone who needs immediate income. Option B, someone who wants to save a variable amount over time for retirement. Option C, a child's education starting next month. Option D, a one-time large inheritance investment. The correct answer is option B, someone who wants to save a variable amount over time for retirement. FPDAs allow the owner to contribute varying amounts over time, with benefits starting at a later date. Question 39. Which health insurance provision allows the insured to change the beneficiary? Option A, incontestability. Option B, change of beneficiary. Option C, assignment. Option D, legal actions. The correct answer is option B, change of beneficiary. The policy owner generally has the right to change the beneficiary at any time unless it is an irrevocable designation. Question 40. In Arizona, continuing education CE requirements for a producer are: Option A, a 10 hours every year. Option B, a 24 hours every 2 years. Option C, 48 hours every 4 years. Option D, 100 hours per term. The correct answer is option C, 48 hours every 4 years. Producers must complete 48 hours of approved CE, including 6 hours of ethics, during every 4-year license term. Question 41. Which of the following is a non-forfeiture option in a whole life policy? Option A, 1-year term insurance. Option B, extended term. Option C, interest only. Option D, life income with period certain. The correct answer is option B, extended term. Non-forfeiture options, cash surrender, reduced paid up, and extended term, protect the cash value if a policy owner stops paying premiums. Question 42. What is rebating in Arizona? Option A, a legal discount for good drivers. Option B, giving something of value to an applicant as an inducement to buy insurance that is not specified in the policy. Option C, paying a commission to a licensed agent. Option D, refunding the premium during the free look period. The correct answer is option B, giving something of value to an applicant as an inducement to buy insurance that is not specified in the policy. Rebating is an illegal trade practice in Arizona. Question 43. Which type of disability provides benefits when an insured can perform some but not all of their previous job duties? Option A, total disability. Option B, presumptive disability. Option C, partial disability. Option D, recurrent disability. The correct answer is option C, partial disability. Partial disability usually pays a percentage of the total benefit, e.g. 50%. Question 44. What is a business overhead expense (BO) policy? Option A, it pays the business owner's salary. Option B, it pays for the actual expenses, rent, utilities, etc., to keep a business running if the owner is disabled. Option C, it covers the cost of lawsuits. Option D, it pays for employee bonuses. The correct answer is option B. It pays for the actual expenses, rent, utilities, etc., to keep a business running if the owner is disabled. BO premiums are tax deductible as a business expense, but benefits are taxable as income. Question 45. Under Social Security disability, how long must a person's disability be expected to last to qualify? Option A, 3 months. Option B, 6 months. Option C, 12 months or result in death. Option D, 5 years. The correct answer is option C, 12 months or result in death. Social Security uses a very strict definition of total disability. Question 46. What is the coordination of benefits, COB, provision in group health insurance used for? Option A, to let employees pick their own doctors. Option B, to prevent overinsurance and ensure the total benefits do not exceed 100% of the claim. Option C, to increase the coverage for the CEO. Option D, to lower the deductible. The correct answer is option B. To prevent overinsurance and ensure the total benefits do not exceed 100% of the claim. COB determines which insurer is primary and which is secondary when a person is covered by two plans. Question 47. In Arizona, how long must an insurer keep records of its insurance transactions? Option A, 1 year. Option B, 3 years. Option C, 5 years. Option D, 10 years. The correct answer is option B, 3 years. Producers and insurers must generally maintain records of all transactions for at least 3 years. Question 48. Which health insurance plan is designed specifically for people with very low income and few assets? Option A, Medicare. Option B, Medicaid, AOX in Arizona. Option C, Social Security. Option D, Workers' Compensation. The correct answer is option B, Medicaid, AOX in Arizona. AOX, Arizona Healthcare Cost Containment System, is the state's Medicaid program. Question 49. Which of the following describes key person insurance? Option A, insurance for the most athletic employee. Option B, life insurance purchased by a business on a vital employee to cover the cost of replacing them. Option C, insurance for the company owner's house. Option D, a policy that covers every employee. The correct answer is option B, life insurance purchased by a business on a vital employee to cover the cost of replacing them. The business is the applicant, owner, premium payer, and beneficiary. Question 50. What is the conversion privilege in a group life insurance policy? Option A, the right for the employer to cancel the plan. Option B, the right for an employee to convert their group coverage to an individual whole life policy without a medical exam upon leaving the job. Option C, the right to change the name of the company. Option D, the right to double the coverage. The correct answer is option B, the right for an employee to convert their group coverage to an individual whole life policy without a medical exam upon leaving the job. Employees typically have 31 days to convert after leaving the group. Question 51. Which annuity payout option provides the highest monthly income? Option A, life with 10-year period certain. Option B, joint and survivor. Option C, life only, straight life. Option D, refund life. The correct answer is option C, life only, straight life. Life only provides the highest payout because it poses the highest risk to the annuitant. Payments stop immediately at death. Question 52. What is insurable interest? Option A, the amount of interest earned on a savings account. Option B, a financial stake in the continued life or health of another person. Option C, a hobby of studying insurance. Option D, the interest rate on a policy loan. The correct answer is option B, a financial stake in the continued life or health of another person. Without insurable interest, an insurance contract is considered a wager and is illegal. Question 53. In Arizona, if an applicant is denied insurance based on a credit report, the insurer must: Option A, tell the applicant they have bad credit. Option B, provide the name and address of the reporting agency to the applicant. Option C, give the applicant a free policy. Option D, ignore the credit report. The correct answer is option B, provide the name and address of the reporting agency to the applicant. This is a requirement under the Fair Credit Reporting Act, FCRA. Question 54. What is the time limit on certain defenses in a health policy? Option A, 10 days. Option B, 30 days. Option C, 2 years, in most cases. Option D, 5 years. The correct answer is option C, 2 years, in most cases. This is the health insurance equivalent of the life insurance in contestability clause. Question 55. A health reimbursement account HRA is funded by: Option A, the employee only. Option B, the employer only. Option C, both the employee and employer. Option D, the state government. The correct answer is option B, the employer only. HRAs are employer-funded accounts that reimburse employees for qualified medical expenses. Question 56. Which of the following is a limited policy? Option A, major medical. Option B, HMO. Option C, a travel accident insurance. Option D, disability income. The correct answer is option C, travel accident insurance. Limited policies cover only specific risks or events, like a plane crash or a specific disease. Question 57. What is unfair discrimination? Option A, charging a 20-year-old and an 80-year-old different rates for life insurance. Option B, charging two individuals of the same class and equal life expectancy different rates based on race or religion. Option C, denying a policy to someone with a terminal illness. Option D, reducing coverage for a dangerous hobby. The correct answer is option B, charging two individuals of the same class and equal life expectancy different rates based on race or religion. Discrimination must be based on actuarial data and not protected characteristics like race. Question 58. An agent who tells a client that a policy's guaranteed values are certain to increase even more than stated is guilty of option A, acquisting. Option B, misrepresentation. Option C, coercion. Option D, rebating. The correct answer is option B, misrepresentation. Making false statements about the future performance or benefits of a policy is misrepresentation. Question 59. Which of the following is a service provider rather than a traditional insurer? Option A, mutual company. Option B, HMO, health maintenance organization. Option C, stock company. Option D, Lloyd's of London. The correct answer is option B, HMO, health maintenance organization. HMOs provide both the health care services and the insurance coverage. Question 60. What does AHC stand for in Arizona? Option A, Arizona Health and Community Care Center. Option B, Arizona Healthcare Cost Containment System. Option C, Arizona Hospital and Clinical Care Service. Option D, Arizona Home and Chronic Care Support. The correct answer is option B, Arizona Healthcare Cost Containment System. AHC is Arizona's specific version of the federal Medicaid program.